In a rapidly evolving world, women are emerging as powerful drivers of change, breaking barriers across different industries and reshaping the economic landscape. Welcome to another edition of Women's Wealth, brought to you by CM Trading. Here we talk financial literacy for women, and we unravel stories of triumph, unveil strategies for success, and embark on a journey towards financial independence. My name is Titilayo Oyinsan. Thanks so much for joining us. On The Vault today, we're looking at why starting early is key to building wealth. You don't want to start late and miss out on all the action, do you? Find out more in a bit. On the Everyday Exchange, we're talking about the importance of estate planning, wills, trusts, and other strategies with a remarkable wealth and investment coach. You do not want to miss that. For wealth management, we are talking copper. Should you or should you not invest in copper? Well, I have a few reasons why I'm investing in it. Hopefully, you'll be able to key in before it's too late. And we'll also look into the markets and find out what its performance is like this week. Make sure you don't go anywhere. This is Women's Wealth, and when we come back, we'll be looking at the commodity for the day. We'll be right back. All right then, ladies, it's time for us to once again open up our vaults and find out one more secret that's hidden within. Okay, now this is a really interesting one. Opening up our vault today, here is our secret. One of the keys to building wealth is starting early. This shouldn't be a secret, but oftentimes it actually is. Starting early is crucial as a factor when it comes to building long-term wealth. The earlier you start investing, the longer your money has to benefit from compounding. Now, this is a process where your investment gains generate additional gains over time. Now, compounding can lead to exponential growth, significantly increasing your wealth. If you figure it out, you'll understand that it gives you much more time to recover from setbacks, because investing comes with risks, and this is where you might have times where the market experiences downturns. Starting early gives you more time to recover from any temporary setbacks, as your investments have a longer horizon to rebound. It also helps lower your risk profile when you start early, as you can afford to take on a higher level of risk in your investments. You have more time to ride out market fluctuations and recover from any losses. Starting late might require you to invest more aggressively to catch up, which is always riskier. So starting early, make sure you invest a little bit more moderately, more strategically, while still achieving that financial goal. And that's it on The Vault for today. We'll be right back after this. You're still watching Women's Wealth, brought to you by CM Trading. And it's time for the Everyday Exchange. Now, I really am connected with this segment as always, because our platform is dedicated to empowering women to create and manage their wealth. And today's episode promises to be no different. We're going to delve into the topic, the importance of estate planning when it comes to wills, trusts, and other strategies. Now, more than ever, estate planning is of profound significance. It represents a proactive step towards ensuring that your wishes are honored, your loved ones are protected, and your financial legacy stays beyond your lifetime. Today, we're not only shedding light on the intricacies of estate planning, but trying to underscore the undeniable importance of it. At the core of this discussion lies the realization that estate planning transcends the realms of just legality and finance. It's a reflection of your values, it's a reflection of your aspirations, the legacy you wish to leave behind. Our guest today, I'm confident in the fact that this is not her first time on TV, first of all. It's not the first time on your screens, in fact. A remarkable wealth and investment coach with over a decade of entrepreneurial experience. Besides being a certified life coach, NLP practitioner, and alumni of the prestigious LBS Lagos Business School, her list of accomplishments would require us to use the entire run of this program just to list them all. She is multifaceted in her expertise, and it extends way beyond business. spending nearly a decade co-hosting Nigeria's premier breakfast show, YourView, she has engaged in incredible discussions about nation building, interviewed leaders, spoken truth to power, showcasing her commitment to driving positive change. The woman I have beside me needs no introduction. Help me welcome to Women's Wealth TMO, Tope Mark Odigie.
I'm so excited to be here.
Welcome.
Yay.
Really? Honestly, I'm so pleased you could make it. I'm so pleased you could join us on Women's Wealth today.
What the platform is a phenomenal platform. What you're doing is mind-blowing and it's going to change a lot of lives. So as much as possible, I love to support in every way possible.
Thank you so much for joining us. I have so many questions. I'm not even sure where to start. But this issue is a big one, but it's also a very touchy one. It's one of those subjects many try to avoid. But let's address the reason why you believe we'll avoid talking about wills, trusts, estate planning.
Okay, so for the past few years, I've been into real estate, and I've realized that we've gotten over the challenge of women acquiring real estate. Not completely, but I'm seeing a lot more women buying real estate now than 5 years ago, 10 years ago. So obviously we've moved, but we're not talking enough about wills and estate planning and trust and all those things. And acquiring wealth is one. But the most important step is preserving your wealth.
Okay.
So I think that when we talk about wealth for women and all those things, well, we focus more on acquiring, how to get money, how to make money, how to invest into real estate. But really, after you made the money, how are you preserving that money? Statistically in Nigeria, the generational wealth does not go beyond the second generation. Only about from 10 wealthy people, 7 don't pass it to the second generation. 9 don't pass it to the third generation. So we have a big problem in Nigeria. We don't know how to transfer wealth from one generation to the next. And that is what the estate planning, wills and trust would address properly.
I actually like that term, generational wealth. But it takes a lot of extensive experience to start building a business and wealth to even get to generational wealth. You think of the billionaires of this world and how they actually got to that level. You hear about different families who have essentially used wills, trusts, life insurance policies and plans to sort of create generational wealth. But it doesn't seem like something that is culturally relevant in this part of the world. Do you think our culture has a lot to do with the statistics you gave earlier on?
Definitely. We're a product of our culture, and everything we do reflects what we learned. So usually the expectation is that the eldest person in the family will decide how the wealth is redistributed. And in most cases, we have a culture of selfishness. So the eldest person in the family, in colloquial terms, kolobi, everything. So in personal experience, and which is why I was excited to talk about this. Usually most time I talk about real estate, not about estate planning. But I come from both of my parents are from wealthy homes, but they didn't get anything from their wealthy parents because there was no plan, there was no will. So it was because, and in both cases, my dad was 6 years old when his father died. My mom was 13 when her father died. So they were both really young people in a polygamous home with lots of older siblings that were married. And because there was no will or estate planning process, no trust, nothing, the eldest child was supposed to redistribute the wealth, and only those that were old enough to fight for something were able to get something out of it, which meant that we were not able to create that legacy. So this family wealth that they had, that my grandfather had, did not move to the entire second generation or third generation. And that was simply because there wasn't a documentation process on how to preserve that wealth, distribute the wealth, which is key when it comes to estate planning.
Do you think there is someone that we can actually blame in all this? For instance, you've given an example, the oldest member of the family, the matriarch or patriarch, the person at the top is supposed to leave that legacy, structure something for others. Do you think they're really to blame? Because I feel like education is everywhere right now.
Education is everywhere for those interested. And you cannot blame me or hold me responsible for what you not teach me how to do. So that's why I was sharing it now, so that as individuals, we don't expect our eldest child to take responsibility for our own inexperience or our inability to plan ahead. So we have younger children having to blame the elder child. The person they should be blaming is the father or the mother that did not leave a proper will or estate plan in place. So yes, you've acquired those properties, but how are you sure that the property will still be in your name? So driving through, and these are personal stories. Sure. Driving through Yaba, about Macaulay Way. I went to Yaba Tech, and I used to love driving through that road. When I'm on that road, because I passed through my grandfather's houses. Wow. You see the A.O. Odubela Foundation, 1, 2, 3. Wow. Today, as of today, I know as of last year, there's only one building left. Wow. It's been sold. It's been pulled down. That legacy of me being able to drive and say, this is my grandfather's houses, buildings. Yeah. My children are not able to say that, oh, my great-grandfather owns A, B, C, D. And that was because there was no will or trust. There was no estate planning. While Mariah, on the other hand, was sharing a testimony a few weeks back about how she was able to, she still gets money from her grandfather's estate that she never met the man, but she's getting money from that estate because the man had an estate planning, trust, will, all of those things that are managed, because what estate planning does is to manage and plan how you will be disbursing the funds that you have put together in your lifetime.
Okay, so now I think we need to actually break it down and educate. Where do we start from? We don't want to make the mistakes our parents, grandparents, great-grandparents made. We've seen that there were major errors that are not just affecting families, affecting society as a whole. And we want to make a change. Someone is watching right now. They don't know what exactly to do. And they're also wondering how it will be viewed should they take that step.
Okay, so we don't like talking about estate planning or wills or trust, because it means you're planning to die. And that's the sentimental part, that I'm not ready to die. I'm still young, so why should I be writing my will or having a trust or doing estate planning? No, you're not planning to die. You're doing it because you love those that will be left if anything happens to you. So it is not a way to prepare for death, but to prepare for life after you're gone, when you are gone. So when we put that perspective out there, then it helps people to change how they're looking at writing a will or planning, doing estate planning. Also, sometimes fear is the biggest motivation. So whenever I talk about these things, usually I get to talk about it in churches more. For this is my first time on the program. Really? Many churches realize that their members don't write their will. So I talk about the fact that how would you feel if you are gone and your children are no longer talking to each other just because of one land or because of one house? And it is happening right now. Children, same mother, same father, who no longer see eye to eye, who can't talk to each other. Some people going to court, spending years on situations that were just about, if they are just planned, if you had put in a proper plan in place that is unbiased and now you've shared your will, it would help. So the first step towards addressing this is to first know what you have. Know what you have.
So this is assets,
yes,
as well as liability.
Yes, know what you have, know your assets, know what you own. Yeah. I'm sure people are, the world is such a global village now. People are going to be watching us from both Nigeria and outside Nigeria. In Nigeria, you can inherit, people don't know, you as you are inheriting assets, you're inheriting liabilities. It's worse in developed countries. If people die, you pay their debts, all their debts. In Nigeria, some people are able to escape. But the truth is, when you think, oh, my grandfather or my father has all these properties, you don't, as you are owning the properties, you are owning all the liabilities. If they did not pay tenements rates or all those things, Land Use Act, you would pay everything up. So as a parent, as a person, planning ahead for your children is to first do a list of what are your assets, what are your liabilities, how do you want your liabilities handled, and how do you want to protect those liabilities from being transferred onto your children. That's estate planning. So I'm buying this property and I'm going to be paying this amount of money every year, but if anything happens to me, it's obvious that my children would not be able to afford to maintain it. So what do? In estate planning, I put the property in a trust that would ensure that if anything happens to me, there is insurance that would continue funding it, like
until it's paid
for.
Fantastic.
You have that conversation, and the purpose of having a conversation is so that you are nothing catches your children and
yes.
Wow. Totally.
Wow. So those issues of surprises, it was surprising for me to note. So this was after having a conversation with a lady who lost her husband, and basically she had been to every single bank, and she was his next of kin on most of his accounts, but she didn't have access to the funding. And so after that, doing a little bit more research, it was found that just being tagged as next of kin doesn't assure you of being the beneficiary of whatever is left in that account. And for some reason, being the next of kin just made sure that she was the one paying back the loan that he owed. I still don't understand why this is still the case here, and I don't know what can be done about it. But of course, maybe putting plans in place would help to mitigate things like that happening. So what is the first step? Someone watching right now wants to take a step.
Like I said, the first thing you have to do if you're watching and you don't have a will, you don't have a trust, but you have assets, is to Nigerians don't like paying for professional consultation. Well, it's sad. True. We don't. If I say I'll tell you consult a professional, someone that is into estate planning, I have conversations and I bring in a lawyer and an accountant and we talk about it, because I understand that while I'm into the asset management itself, I am not into the legality. I'm not a lawyer. So a lawyer would handle the legal part, an accountant would handle the tax implications, while I, as an estate management person, will handle the assets themselves to ensure that they remain productive. Okay. The assets are not sold prematurely. Sometimes people die and in like 3 months, they started selling off all their assets. No, because usually that's an emotional decision. It's not usually well thought of. So you might put in a clause to the trust to ensure that this property is locked for the next 10 years. Nobody can sell it. The document, those are things you plan ahead of time. And when you, or in some cases, you have debts. So you know that because you have personal debts, you would ensure that you transfer those debts into the company, so that a company is the one that will carry the liability if you're gone, and not your children that will carry those liabilities. So first is to talk to a consultant or a professional. And if you feel like, I don't want to talk to a professional or a consultant, basic things you can do is to first do a detailed list of all your assets.
First.
So these assets, everything.
This is not just landed property, cars. What else can you have on this list?
Shares. Your shares are assets. Now we have cryptocurrency. Yeah. Some people have enriched their money. They've not enriched anybody. Cryptocurrency keys. If you have it, if you don't transfer it, the money is gone. Like you just dashed space. You just dashed
the
space.
Blockchain.
The blockchain.
Yeah.
A whole lot of money. So I know you're trying to protect your key, your code, your Ethereum is coded.
Yeah.
You need to have it documented. Some people have monies that no human being knows about. Don't do that.
The same way people used to keep it under their bed. Now it's in cyberspace.
Yes. So I think it's important that you document all your assets and be open to your lawyer. If you cannot trust your lawyer, I don't know, who go bury you, they hide body for the person. Wow. That's a local way of saying that you have to be honest with your lawyer, because this is a person that can advise you on what you're doing, what to do better. So that's the first thing. List and open up yourself to a lawyer so that somebody has an idea of everything that you own. And monies are not lost in transit.
Yeah. Because I've heard, from a little bird, that a lot of banks get rich off people that have unclaimed monies are just sitting in some bank accounts just because someone just refused to write it down and give it to a lawyer. But then again, there are some who believe, that writing it on a piece of paper, keeping it in an office drawer somewhere, somebody will find it. Apparently in Nigeria, legally speaking, an actual will is not of the law until it's been submitted to the probate court. A lot of people don't know this.
It must be submitted. If it isn't submitted, then it is just it is not legally binding on the family members to comply with your wishes. It's a wish list, not a will. It becomes a will when it's submitted to probate court. It then becomes binding that it must be enforced. And you can put your documents. People put documents in banks. Banks have vaults.
Yeah.
You can keep your people don't do. I don't know why we don't do that. Keeping your physical documents in your bank vault and keeping the spare document in your digital safe. So, why in a digital world we must talk
Very
about
true.
this.
Yeah.
Digital safe. You need to be able to keep your documents virtually as well as physically, and both are now documented to your lawyers.
I have to wrap it up with this. A lot of people assume that wills, trusts, and the like, estate planning generally, is for the wealthy. People who have attained a certain amount of, let's say, millions in naira, probably not in dollars. First of all, is this true? Is it more beneficial for those who are wealthy? But does it truly benefit those who are probably still in the hundreds of thousands? When do you start to plan your estate?
Let me say it this way: there's no small estate planning or big estate planning. Everybody should just plan, because you want, like I said, the reason you're planning and putting a will and estate planning in place is not because you're thinking you're going to die, but because you want your loved ones to be protected and taken care of when you go. So having your life insurance is very important. It's not planning to die; it's planning to take care of your people. It's not a lot. I have a foundation called Women in Real Estate. It's a mentoring platform, and I'll share this quick story. When somebody said that the property she got from her father was a tree.
Wow.
So the father had like a few trees in his compound. Like, he willed each of the tree to his children one by one, because he had more female children and they can't inherit the land. So he wrote clearly that they were going to get the trees, and these trees are not. They are called this ogbono trees. They last for years and they are money making. And so she said, what I got from my father is an ogbono tree, because I cannot by culture inherit the land. So he gave me the trees and gave the land to the men. But that is someone planning that he didn't have many properties. His house is on the land and he had ogbono trees there, and he gave the trees to his daughters and the land to them. So you don't need to have millions of naira to have estate plan. You don't need to have hundreds of thousands. You can decide to will your wigs or will your shoes.
I've heard of that. Actually, I have heard of that. Cars, devices, laptops. When you think about it, they cost as much as, some property as
True,
well.
so true.
You know what? At this point, I know that
We can't exhaust it.
We can't. There's still so much to talk about. But it's amazing to have you, TMO, on the show today.
So happy to be here.
Now, Women's Wealth doors are always open. Please
We'll love to
make
come
sure
back.
you don't make yourself.
We'll talk about houses, talk about lands, then.
Definitely. Still so much more to talk about. But once again, thank you. All right, then, that's how we wrap it up on the Everyday Exchange for this episode. Hope you learned something new. This is Women's Wealth, brought to you by CM Trading. Welcome back to Women's Wealth, brought to you by CM Trading. Today on Women's Wealth Management, our investment option in focus is copper. In the world of commodities, copper stands out as a metal with a remarkable history and an even brighter future. Often referred to as Dr. Copper due to its ability to predict economic health, this versatile metal holds a unique position in the global economy and is increasingly being recognized as a promising investment choice. Trust me, copper has earned its reputation as an economic bellwether due to its wide-ranging industrial applications, from construction to electronics, transportation, and right now, renewable energy. Copper is essential when it comes to various sectors right now. Its demand is closely tied to the economic growth, which is making it a reliable indicator of the global economic health as a whole. Copper is playing a really vital role in the green energy revolution as well. Solar panels, for instance, wind vanes, and electric vehicles rely heavily on copper for efficient energy transmission and storage. Copper, like other commodities, serves as a hedge against inflation. It's eroding the purchasing power of currency, but tangible assets like copper tend to hold or increase in value during inflation periods. So think about it. This makes copper even more valuable, a valuable addition to any investment portfolio as a way to preserve wealth. Investors interested in copper have various avenues to explore. They can invest either directly through copper, through commodity futures, contracts, or maybe even exchange traded funds, that's ETFs, that tracks performance of copper. Alternatively, you can try investing in mining companies that produce copper, and they provide exposure to the metal's potential price appreciation as well. Despite its importance, it does have its own challenges, however. Copper futures sank to the $3.7 per pound level in August, the lowest in over 1 month, as new data magnified some concerns over China's economic recovery and further pared the outlook for base metal demand in the world's top consumer. But adding copper to your portfolio can provide diversification beyond traditional asset classes like stocks and bonds. So why not? That's our investment option for today, ladies. So we're going to be looking at what's happening in the market in a bit. This is Women's Wealth, and we will be right back. It's time for us to find out what's happening in the markets. Are the markets in the green or in the red? Let's find out from Dr. Fred.
Hello ladies, thank you for the opportunity to contribute to your journey in taking control of your finances. My name is Fred Razak, Senior Trading Strategist here at CM Trading, and I'm here to answer your questions about finance and trading the financial markets. So the first question we have on the floor is, how much capital do you need to start trading Forex? And what are some of the key costs involved? So, in essence, trading the financial markets and setting up an account at CM Trading, we do something that most financial brokers do, is we leverage your account, which means you're able to control a larger amount of money with a good faith deposit. The financial markets are huge. Most of us don't have enough money. Most people on earth, okay, not just us here in this room, but most people around the world don't have enough money in their bank to trade the financial markets. And because of that, they've set up a system where we're able to leverage our money to produce the ability to trade larger amount of money in the anticipation of making larger amount of money. Now that is something that you could start with at any given broker. Now here at CM Trading, we give about 200 to 1 for Forex symbols, which means for each dollar that you deposit in your account, it gives you $200 of trading money. You can't take out that $200, but you can trade with it. Now, speaking of any minimum amount, so the minimum amount is $100. So that would give you something like $20,000 to trade the financial markets. Now it sounds like a lot, but in essence, it's not that much. Even $100 is a very marginal amount to start trading. If you were to get any more serious in trading, I would recommend getting anywhere between $500 to $1,000 into your account. It's okay if you're not there yet, but if that's your journey, if that's the journey that you're looking to pursue, I would start with $100 and build your account from there. Now, in terms of what costs are involved, really there are no costs. I mean, you need a computer and you need a smartphone, which probably you have, and you need some time to invest in yourself, to educate yourself about the financial markets. That's the cost. The cost is really time and effort. Now, with that said, there are no costs in terms of trading, but there is the cost of purchasing the spread. Okay, so to facilitate the trade, we don't charge you a fee, but you pay the spread, meaning that if there's a currency that is traded between 5.03 and 5.07, you're purchasing it at 5.07. That's the spread. That's all that is charged. There's nothing else that is charged. In essence, you're trading the market, okay, which is at 5.07 in this particular case. Next question, how do you determine which currency pairs to trade, and what are some of the most commonly traded pairs? So the first rule of thumb is you're looking for something called market action. Now, market action is basically price movement with volume, which gives you character. Now, most of the major pairs, generally speaking, trade with market action, but not always, okay? So that leads to the next question, is what are the most common pairs to trade? So the most common pairs to trade are the ones that are the majors. The Euro USD, the Japanese Yen USD, the British pound USD, the Canadian dollar USD. Some of these are considered the major pairs, both because politically, demographically, and economically, they consume some of the largest continents on Earth. And there's no two ways about it. You want to go with the safer pairs because the more exotic pairs actually cost you more to trade. What are some of the most important technical indicators that traders use to analyze Forex markets? Not just Forex markets, but again, any markets. So I just mentioned it, volume. Now, we are all creatures of patterns. Now, there's one word that I'm going to say, and it's going to kind of lighten you for other terms. If I say the word trend, what's the first thing that comes to mind? Fashion, real estate. Those are words that are commonly used in the financial markets. There's a trend upwards, there's a trend downwards, right? There's a fashion trend that everybody's wearing this. Now, as humans, we kind of move as communities, okay? Especially women, right? Before every season, I remember in the garment districts, right? We would try to figure out what cosmetics colors were going to be that next season. And based on that, we knew what color shoes and what color skirts and what color blouses to make, right? And that's just the way trends work, right? There are trends every year from year to year. And so do the financial markets have trends. And as a result, when there's a lot of participation, when there's a lot of volume in a particular direction, that's when we traders care, because that means that there's being money flowed into an asset or money being flowed out of an asset. I want to thank you for this opportunity to contribute to your journey in taking control of your finances. My name is Fred Razak. I'm a senior trading strategist here at CM Trading. You can scan the QR code on your screen to join thousands of women just like you who are learning about trading Forex and the financial markets. Or you can visit www.cmtrading.com/womenswealth.com. Thank you.
We've come to the end of this episode of Women's Wealth. Follow us on our social media platforms at Women's Wealth on TV. My name once again is Titilayo Oyinsan. Bye for now.